Hi, everyone. Welcome back to The Big Picture. I'm Joe Cruey, your 10,000-foot view into the crypto option markets here at Paradigm, joined by our crypto vol data guru, Greg Magadini, crypto vol portfolio manager, and Twitter sensation, Marty. For today's guest, super excited to have head of APAC, Jeff Anderson from STS Digital. Ton of great stuff to chat about today. And this will also be our last show of 2023. We've done roughly 40 episodes this year. Doesn't seem like it was that long ago when we were kind of doing our first couple bootleg episodes, and excited to see where this has kind of grown to. So thanks so much for everyone that's continued to watch. Before we dive in, help us continue to grow. Smash that like button, hit that subscribe button, as we strive to deliver you some of the best content in the crypto options space. But Jeff, welcome to the Big Picture, man. Thanks for joining around the holiday seasons. I know everyone's busy, with family stuff, so very much appreciated. But before we begin, if you can give a little background, on yourself, how you got into crypto and what you're doing at STS.
Sure. Thanks. Honored, thrilled to be here. Round out a great year you guys have had. So thanks for the invite. My background comes from TradFi. I'm a recovering FX options trader. I worked at investment banks for about 15 years. Just got disenchanted with that whole side of the business. Left in 2019 to join crypto professionally. So joined a firm called Vega at that time. We managed that for a long time, and we were high frequency ARB type stuff. Post FTX, that world looks very different, and so I came back to my one true love, which is options, which is kind of what we focus on at STS. So we're a market maker, liquidity provider. We take principal risk, and we have a couple different kind of business lines that we do. We obviously market make options and screens. We have an OTC desk. We do some token market making, structured products. Play around in DeFi. So we do a lot of cool, interesting stuff there. And we trade a lot of vol, and that's why we're here to talk today, both the majors and altcoins.
Awesome, man. So I guess we'll get right into it. Nice mic, Greg. Looks good.
Yeah, thank you. Courtesy of you guys. Appreciate it.
Yeah. Let me share my screen quickly. I know, Greg, you have your usual amazing stuff with some slides, so let me do that right now. Take us away, man.
Sure. So this is the optimistic base case. I think we could see this going into the spot ETF decision. Basically, what we're looking at right now is an overlay of 2020 versus 2023. So if you guys remember 2020, we came out of that's kind of the first real leg up out of the bear market. We bottomed out in 2019, and then we started really getting some momentum into Q4 2020. And so if we kind of overlay 2023, we see, both had events in March, and then we're kind of ramping up into the last, into the end of the year. So if I'm kind of using this as a base case, I think this is kind of interesting. If we just jump to the next slide on how we see things. So one of the things to keep in mind is that in crazy bull markets, we've seen, really strong positive spot vol correlation. So if you look at that chart right here in sort of the back third, you can see Jan 2021. That's really positive spot vol correlation and explosive vol to the upside with the Bitcoin move. So you can see vol hit 150. And then where we are today, it's high for 2023, but historically low. So that's just something to keep in mind. I mean, I think those January 12th contracts are pretty juicy, but it's just kind of something to keep in mind in terms of contextualization. Bitcoin's a more mature asset now today, but it doesn't mean that we can't have some sort of explosive vol like we've seen in the past. If you just jump to the next slide. So I'll let Jeff talk about this kink. So I'll just real quickly just touch on this. The straight lines are going to be realized vol. So we got 10-day and 30-day realized vol. And we can see the term structure with the forward vol superimposed on top of it. So obviously there's something juicy there. If you go to the next slide. So one of the things that I find really interesting as sort of a base case for sort of a vol setup in this position, we can see that with sort of the rally that we've had recently, this is a chart showing us the evolution of the skew. This is showing us the January 26th contract because there's more history for it. But we can see 3 weeks ago, the call overall vol was more expensive, but the call wing, especially say the 25 delta call, and a 15 delta call were really expensive. Now we can see that not only have we had a parallel shift lower in vol, but we've also seen a flattening of that call wing. So sort of in my base case, which I think could be interesting, if we use the ETH proof of stake upgrade that we saw in September 2022 as a sort of a precedent for this type of crypto vol event, we saw going into the proof of stake merge implieds really firming up. We saw the 1 day daily option implied trading in triple digits. And so if I use this kind of as a base case of what we could see going into the end of the year and going into the spot ETF decision day, I could imagine vol continues to firm into that event. And an interesting position, in my opinion, would be sort of a delta neutral, buy the call wing, the 25 delta call, sell the underlying futures, keep it delta neutral as vol firms up. We would pick up some deltas. Obviously, there's some time decay there that's offsetting it a little bit, but that could be something interesting. I expect vol to firm up into the event. And I expect potentially a positive delta bias would make sense in my opinion. So that's kind of how I'm seeing it, and this is kind of the surface that I'm looking at right now.
All right, awesome. Yeah, so Jeff, looking at this chart, right? It's pretty clear that that Jan is really starting to kind of bake in some premium. I think it's around 6-7 vols higher than the rest of it, or than the 5 Jans. So I guess what are your thoughts around the vol price action as of late, and so like
first of all,
ETF
yeah, as an options trader for many years, like crypto really hasn't had to struggle with event risk until really a year ago when people started to get very macro and talk about, okay, there's event risk over the CPI or FOMC. So this is new to, I think, a lot of traders in crypto, and thinking about forward vols and where these are. And this is a beautiful chart here. The the 5th of Jan 48. I mean, we have a very defined window, like as mandated by the SEC, that it's going to come somewhere in between there. And so the event risk for it, like you look at that, you think, oh my, like I need to sell this. This is too high. This is juicy. Because you have, Jan 5 at 48 and Jan 12 at 54. So you have a 6 vol, so your forward spread there for your 1 week forward vol is about 67, which is what this is saying. And the break even on that is not that high. Like optically you say, I could never buy this, but when vols are high, they're never high enough. And when vols are low, they're never low enough, is kind of how I've lived, because we do a bad job as humans of kind of anticipating and understanding what these wings mean. And so, if you think about it, just like a 1 week at 67, the break even is 3,200 points. Mm-hmm. If Bitcoin is here at, 42, 43. And so, what are your expectations on a move? Well, if we don't get the approval, I think you're going to see a sell-off more than that. And if we do get the approval, you're going to get the green light, and you're going to at least see candles, a lot higher than that. So, my feeling would be that is probably, you want to own that forward vol, or you want to own some event risk post release. I agree with Greg that this is just going to continue to float higher. People are going to get nervous. If you want to have a delta bias going into it, it makes sense that people are going to get greedy or feel, hey, I don't have enough Bitcoin exposure. I need to own some of this, so we can see this drag higher. And it's, optically that looks very skewed, but it's not really one you want to be short either. We're going into Christmas. It's a really interesting timing for all this ETF to go off, because we have the Christmas illiquidity, we got New Year's in there. Dealers are going to be happy to just sit back and try to, put on a position and sit with it and not really mess around and ruin their holidays. And so if you're short the Jan 5 or the Deck 29, like you could be in some trouble as well. You can already see now, like, Gamma is realizing the last, 3, 4, 5 days, we've got realized vols in like the mid 50s, depending on how you look at it.
Right.
And so it's just really tricky. I don't know. I mean, my personal take is, don't get cute with the skew or the risky or the flies. You just want to own some at the money gamma going into the event because it's a very, very bimodal event. We either get approved or we don't, and we rip higher or we collapse lower. And so option theory, nothing is normally distributed about this right now. So it's very interesting time.
Yeah. And look, I understand, you're a vol trader. You look at it, through, I guess, a different lens. But I guess in terms of your fundamental view, we had Novogratz on CNBC this morning, and it's basically a foregone conclusion. Like this, he's like, this is happening. If they don't, then Gensler and the SEC and all of them are going to have a lot of egg on their face. I guess what's your view, I guess, from a fundamental perspective?
Yeah, I agree wholeheartedly. It is going to happen right now. The wheels are too far in motion. Gensler can't stop this. He might, but I think he realizes at this point that would just make him look so bad if he were to delay this. So I think it is foregone conclusion. I think it's happening early Jan. We've had that view for a while now. And people say, okay, well, this is clearly priced in, but I don't think so. I think somebody was asking me yesterday if this was a sell the news type event. And in a way, yes, but I think you immediately get a candle higher and you get, a move up to 49.50, candles higher than that. I'm sure you're going to get a chance to sell and stuff. I think probably 48 hours past the event that we probably settle back lower, closer to where we went into it. So I don't know, let's say we go in with spot at 43. I think we can see 50. We come back down. And what this means is it's very good for the industry, but it's more of a slow motion type thing, right? This is not, anybody who's fast money is already going to be in the market, and they're going to have the, close to the exposure they want to. And then what's going to happen is this has brought a lot of slow money institutional. Now you can have BlackRock saying, okay, we can be allocated 50 basis points here or 1 year here. So what happens is it becomes a slow grind back higher. And we continue to push higher, like you buy any dips. But I don't think this is immediately, $60K paid or anything like that. It's very, very good for the industry. But it's going to create some moves in the short run. But we settle more or less here and higher.
Cool. Makes sense. Yeah. Thanks for your views on that. That was super, super informative. Okay. So I guess we'll get into the flows. What we've been seeing on Paradigm, over the past week. There's been a pretty sizable position in this BTC versus Ethereum straddle. We also talked about it on the last episode, but specifically selling the 1,000 BTC March 45Ks and buying 20,000 of the ETH March 2400 straddle, representing around 180K Vega per side. It traded as a package. Both were blocked basically at the same time. So clearly somebody's building up, a sizable position in the Ethereum versus BTC, 3 month roughly at the money vol spread. But outside of that, seeing some upside being bought in, Bitcoin and Ethereum, December buckets as well. And then I would say the continued theme in December has been these call calendars that have been trading in Jan-June expiries and March-June expiries. So specifically selling the front and buying the back. It's been a massive trade, over the past few weeks, really since like the latest leg up in the spot price as people try to, roll out positions. And yeah, we now have some of the tools to actually, quantify this, right? So give me 1 second. So the issue with, when you look at things, I guess if you're newer, to the option space, like when I'm like ranking, the trades by contract quantity, sometimes it doesn't actually, do it the justice it deserves for how big these trades actually are, especially when you're looking at the longer dated tenors. So we've been working on some tools around actually building out some option Greek analytics, at Paradigm. And so what this chart shows is the cumulative net taker Vega executed on our platform in December. So very similar to the, net taker flows charts that we've been showing over the past month or so. But the x-axis is, the Bitcoin strike. The y-axis is the cumulative Vega that the taker has traded in these strikes. So if the bar is positive in positive territory, that means the taker bought. And then if negative, then the taker sold. And the different colors, denote the different option expirations. And just to note, this is taking Vega at trade initiation as a proxy, i.e. this is not yet dynamic in the level of spot and vol when you'd expect Vega exposure to expand or contract dependent on, certain parameter moves. And we'll work this in eventually into next year. But if you're looking where the biggest Vega trades have concentrated on the buy side, it's definitely these green bars next to the arrows, which denote the June expiry. And as I just mentioned, we've seen significant flow in the Jan-June and the March-June call calendars that might not be, the top trade in contract quantity terms, but in terms of option risk are actually a lot bigger. So cumulatively in the 50K and 60K strikes over the past few weeks, you'll see about 350K Vega, has been bought in these strikes. And you'll see that these June Vega trades have been funded by selling the 50K strike. And specifically, that is a brown and gray bar, which denote, as I mentioned, the Jan and the March expiries. So a good amount of long vol exposure in the market now, in the 6-month bucket, which is generally not that liquid. And that's certainly been reflected in the pricing. We've been seeing some people come in to kind of try to buy more of the June Vega, and I mean, the liquidity now is just dire, because there's little ability to kind of recycle that risk out there, and we're seeing a lot of kind of bid onlys on Paradigm for those for those tenors. But in terms of kind of the Vegas and Greek analytics, that's kind of what we have for today. But I guess I want to pivot a little bit into, the altcoin options and the DeFi space. I mean, Jeff, you guys are pretty big in the alt option space. This is certainly a gap on Paradigm. We mostly just do Bitcoin and Ethereum, as that's what they're a bit listed. So kind of curious to hear what you guys are doing there.
Yeah, sure. So also been very busy, as I'm sure you're aware. It's a very interesting market to trade altcoins in, especially options on that. Because if you think about the price action for alts these days, it's clearly not normally distributed. We're having coins double and triple overnight. And so when you trade options on these tokens, it's almost like a compound option, right? You're trading options on an option. And so you got to be careful you don't blow up. That's number one. That's rule number one in all trading.
Don't
really.
blow up. That's a good.
Don't blow up. But yeah, we're quite busy. I mean, we work with a lot of foundations. We work with a lot of high net worth guys who come in and have bags, that they've been sitting on for the last 2 years that have been down only, and now they're back to life and they've doubled or tripled, and the vols are 100, 125, whatever they are. You get some juicy premium for selling call overrights. So I think that's a very popular one with some of our client base. We do a number of structured products as well, and a lot of those quite often have an embedded yield in it where you earn premium for selling options on, depending on the structure. And yeah, with vols as high as they are, triple digits, like these yields are quite juiced when you consider like the dollar funding as well. So we've had a lot of really good uptake there. And then just, a lot of guys who come in and want to speculate, and they're happy to pay 100, 125 vols because the stuff is moving, man. The stuff is really ripping around. And it's a clean way to kind of express views in a loss limited way where, sometimes, everyone says, oh, you can just trade perps. Why would I trade options? Well, this is a great example of that. You get huge wicks, you get a lot of daily stuff. And, if you want to lev long some token and it's down 10% the next day, well, you're probably getting wrecked in a perps, but in an option, you're like, well, whatever. I mean, that's like a normal one-day bid-ask kind of a thing. And so you can, this is the market that's made for options, right? This is where this product really shines. And so it's been really, really interesting. We've seen across the whole gamut, like Solana options have picked up quite a bit. Ripple options are active. Those are kind of like the majors. But we trade options really down to like tiny market caps. And so we've seen a lot of guys come through, a lot of interesting flows, a lot of people, want to be in the space for these reasons.
Right. So in terms, I guess, percent of notional that is trading relative to, I guess, Bitcoin options. Look, I know we'd expect that percent to be small, but like, I guess it would be kind of a good to know kind of what your estimate is there. Like, is it 1%? Is it 2%?
Oh, it's a good question. I would probably say higher, because like the bilateral market, the OTC, like me trading against, Galaxy, QCP, GSR, like that is quieter, because people are still worried about credit risk. We don't quite have a third-party solution in place yet. You can block some trades through in a couple of places, I guess, but that's not as prevalent as you think. But in the form of kind of structured products and OTC trades with clients where they're facing us and they post collateral and things like that, like there's bigger sizes than you think. I would say closer to 5 to 10%.
Wow.
Of what's going through in maybe 5 to 7%, let's say, in these alts.
Interesting. I mean, Marty, you're a big altcoin option guy, right? I mean, what's your experience with them, and just kind of your general thoughts on the evolution of it?
Them being altcoins or them being Jeff quoting me 500 handle?
Listen. What?
Oh,
come on, 1 week bonk. 1 week bonk. That was a special rate for you.
Yeah. Oh, that's good. I think it's going to be interesting to see when Deribit brings back Solana options, and supposedly they're going to be adding XRP and Matic, but it's going to be stable coin margined. It's not going to be coin margin. So, Jeff, how are you looking into 2024 with Deribit bringing on some altcoin vol on stream? So you're not going to be trading it, OTC. Are you guys going to be actively trading there? Yeah. How I'm looking at it is, if people want to trade it, the market makers are going to come. I mean, it's that simple, right? If people want to trade this product, then the market makers will be there. I know Solana fell off when, it was down every other day and the chain was turned off. So of course, who wants to trade that, type of product?
We're looking forward to it. Honestly, any growth in the altcoin option space, it is a good one. A rising tide lifts all boats. Yes, maybe there's some, erosion of our spread just because everything is a lot clearer, right? Our clients know where these things are. We don't care about that. I mean, I think that there's still a lot of opportunity there. It's great for us, right? It gives us better liquidity, allows us to hedge things, because right now, we have Bitcoin and ETH liquidity essentially, and anybody who trades alts with us, we're warehousing things, we're running correlation risk, we're doing all this stuff, and so it puts another tool into these market makers' back pocket, and then improves spreads everywhere and makes things better for the industry, and continues to push this higher. So we are quite optimistic on the altcoin space, on derivatives there. I think we continue to see heavy growth.
And Greg, at Amber Data, are you guys getting the pipes in place to be able to get all the cool sort of analytics on the altcoin stuff? Because I'd love to start talking about those charts as well.
Yeah, absolutely. I mean, we have a bunch of spot altcoin and DeFi DEX data, but it'll be interesting to start seeing sort of the option space on that. And a couple of things that are interesting about trading altcoins. I was talking to Arthur Sept not too long ago, and he was saying that in bear markets, you can essentially short altcoins and get long ETH as a hedge because everything kind of goes down nicely. But in bull markets, different altcoins will just have these crazy gap ups, and kind of, as Jeff mentioned, you get like optionality on options by essentially trading calls on these types of altcoins, because overnight some protocol development will happen, the coin will go 400%. There's no space in between to hedge. So the dynamics of a bull market versus a bear market in the altcoin space is very different. In a bull market, altcoins are binary. And then in the bear market, kind of liquidity gets sucked out of crypto evenly across the board, so to speak. So that's kind of a very interesting dynamic. And then something else that Jeff mentioned, working with foundations, I also think that's kind of an interesting angle and interesting trade. So a lot of protocols will essentially have a treasury of their own tokens. And so there's something to be done there. Like, it's very interesting for a protocol to want to sell covered calls on their altcoins and essentially generate operational yield for the company and for the developments. And as a trader wanting to warehouse that risk, there's a good opportunity there to do some sort of like, OTC agreements and stuff like that with different protocols. I think that's going to be an interesting angle. I don't know if that's very developed yet, but I do think that's going to be a very interesting sort of future for protocols and altcoin optionality.
Yeah, that's something I actually do a lot of, Greg, is trying to like educate foundations and treasuries and get them to understand what this means and how it's a very real way for them to extend their runway and provide real yield to it. It's obviously not a free lunch, but we do a lot of back testing, a lot of proving of the model, and we do a lot of interesting things around this to kind of like pay a real yield to these foundations who even have dollars as well, and they can sell strangles, and then they get a market making benefit tied into this whole thing, and they're getting a yield to fund their operations. And so there's a lot of that is still going into the market to kind of explain to people, listen, we're not in here like trying to sell you a golden goose. This is like, there's real value in these options and selling these and generating yield and diversifying your treasury to just improve the life and the kind of the runway that you have as a project.
Yeah, that's very interesting. And kind of one more thought that pops in my mind is that if a protocol needed to sell treasury or sell their tokens directly in the market in order to sort of fund their business, it's a kind of like a bad show of confidence. It's almost like they're getting out of their bags, so to speak. And it gives like a really bad look. But if I sold a covered call to create operational runway, and then we got called out of our position, but we still believe in our token and our project, it's kind of a very different narrative. And I think that's something that protocol should think about as well.
100% agree.
It's a little interesting there because a lot of these DeFi projects are supported by DeFi native people. And you're exactly right, Greg. Like if the protocol is selling its own tokens, it's like taboo, right? Like you just can't do that. So if you're able to word it, or if you're able to generate yields more efficiently, or less, I don't know, like so you're not scrutinized by your users, then for sure there's a total market there. And a lot of these protocols just would rather sit in USDC or ETH, like right? They have $20 million in ETH. And you're like, you guys rode that all the way down. You guys didn't do anything with it. You guys didn't sell any. You guys didn't generate any yield. Just a totally different mindset to something that we're used to.
And if a protocol treasury ever comes to you and says they want to buy calls on their native token, you need to get the F out of the way. Let me tell you, you need to run. Yeah, that's messy.
Yeah, Jesus, bit only.
Yeah,
but okay, awesome. I mean, we're coming right up on 30 minutes. I think we should just leave it there. I did have some liquidity stuff, but I think we'll save it for the start of 2024. But Jeff, thanks so much for joining the show. That was amazing convo. I learned a ton on the altcoin option side. Again, this is a world I don't get to touch, and it's not like you can really read about this stuff on the internet. So thanks so much for that. And Greg, Marty, it's been a great year, man. We'll see everyone in 2024.